Welcome to the Real Money Show, the number 18778 Silver and the website guildhallwealth.com. Go to the website, give us a call if you want to learn how to hold physical gold and silver in your possession. If you can't hold it, you don't own it. And everything we're going to talk about today is about how gold and silver solve so many problems. And they're going to solve those problems by the prices continuing to rise as they have over the last year and 2 years. But you need to have the actual physical product. You can't do investments. You can't have counterparty risk. If you're gonna get a hedge, if you're gonna get insurance for your portfolio, you need the real thing. I don't see central banks doing ETFs. I see them buying the real thing. And at Guildhall, we help you buy the real thing. You can do it in your RSP. You can buy it direct, take delivery, or you can store it in a vault for ease of liquidity. And we will show you how. We've been in business since 2002. We've been working with Questrade to offer registered accounts and since 2016. And we pioneered that vehicle, so we know a lot about it. So give us a call, 18778-SILVER, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And Jerry, let's start with the fact that we've already had a couple of $100 days in gold. We got one and we got another. And the market is moving very strongly. And the question is, why is it moving so strongly? And can it fall as quickly as it's risen?
Some tremendous momentum right now and backing in the gold and silver space, primarily due to demand. It's a coordinated effort to acquire as much physical precious metals as possible. It's no longer a question of what's in your wallet. It's a question of what's on your balance sheet. And it's a race to fill that balance sheet, because what's been on that balance sheet for far too long is the risky stuff, the toxic derivatives, the financial weapons of mass destruction. So gold right now, as opposed to previous cycles, back in the 80s where we had gold spiking on geopolitical turmoil and even the witnessing of the Hunt brothers driving up prices of silver, it is repricing, as Vince Lanci quoted this week in an amazing article that he titled, "Gold is not spiking on crisis. It is repricing on fracture." And he couldn't be even more correct, because what we've seen is gold surging $100 per day, 4 days consecutively. This is world record stuff.
And a lot of people do look at it and they think, oh, that's expensive, right? But not when you look at the debts and...
No, look around us.
You know, it's funny. I would say something like, houses were expensive when they were $500,000. Now they're $1.5 million. So they're still expensive.
What's not expensive is not paying attention to what's going on in the world today and what they're doing.
And also, as we go through some of these articles and things that are coming through, you start to realize that gold is about revaluing. But I loved what Vince Lanci was talking about. He was saying that in the past, if you had issues coming up, and I do think, just to digress a moment, what's happening right now is we're moving from globalism to a multipolar world. That's mercantilism, not globalism, Malthusian globalism. It's mercantilism. I always say to people, hey, I want you to come drink at my bar. I just can't have a tab open for you anymore. Mm-hmm. You got to pay.
It's fairness across the board.
So that's my little thing on mercantilism. But I really liked the idea that he said, look, in the past, you had a coordinated answer to things. You had a full front of here's how we're going to deal with this thing. But right now, it's all fractured, and there is no answer. And the answer is all of these countries are protecting themselves with gold, which is ultimately the answer. The answer is we don't want this counterparty risk. We want to protect our sovereignty. We want to protect ourselves. We want something that isn't someone else's liability. And what's our go-to? Well, our go-to is going to be gold in this case.
Yeah, that's exactly it. And as Vince Lanci wrote, he said, unlike the 1980 rally, which faded with geopolitical resolution, this move is rooted in a broader structural shift. The core difference today, global trust has eroded without a functioning mechanism for recovery. We've seen trade war escalation, waning confidence in U.S. security guarantees, sanctions weaponization, and a retreat from coordinated global responses are embedding gold as a strategic reserve asset across both state and institutional portfolios. Back then, the world was beginning to globalize and tear down walls. Well, the world currently is in the process of, as you mentioned, raising walls, deglobalizing along mercantile protectionist lines. Gold's not spiking on crisis now anymore. It's repricing on fracture. And HSBC's James Steele commented on this, and he said the breakdown in international cooperation in the last few years has led to gold staying permanently high. There is a bigger geopolitical bid in the market. So this really answers the question, is this the peak in this market? Or could gold potentially drop as much as it has climbed over the last few days? And I think this just answers that question.
And I would add to that, you have to look at the value. It's not just about price, it's about value. I've noticed, and I've been reposting on our X, a lot of people have been pointing out the Dow Gold ratio.
That was a good one. Mm-hmm.
Something we have talked about for years. The fact is that in 1980, that ratio hit 1 to 1. In 1999, it was around 40 to 1. Today, it's come down from about 16 to 1 to, I think it's around 12 to 1 right now. And in 2011, at the last peak of the bull market, where gold went from $250 up to $1,900, it topped out at 4 to 1. So we do have a long way to go. Either the Dow is overvalued or gold is undervalued, or it's a bit of both. Same thing with real estate. Now, you have an article, Jerry, about how gold can solve the housing crisis, and that comes from Ainsley Bullion. What are they talking about?
Well, just like our nations, our economies are very similar. So we look to the Aussie. My background in currencies, we understand that the Aussie and CAD, Candy, they're both commodity-driven currencies. So we look at them and they look at us as far as valuations of asset goes and other technicals.
I just want to stop you for a second because you just said that we are commodity-driven currencies.
Yes, historically, and our legacy is...
So if you're not digging, you've got a problem.
That's correct.
I just wanted to
very good point.
Thank you. I'll rest.
Very good point. So just like them, they have seen housing in Australia, and they even noted that the U.S. housing has increased since 2006 2.5 times when priced in U.S. dollars. However, it has actually gotten 50% cheaper when priced in gold. And they cite the Schiller Case Home Price Index gold ratio. It further reinforces this view. They see that housing priced in gold is an oscillator within a sideways range. This is in stark contrast to the upward trend of housing when priced in dollars. And they pretty much conclude that gold, along with being in limited supply and taking energy and work to produce, it's also divisible, portable, uniform, and doesn't disintegrate, therefore has the 6 essential properties of money. Gold is consistent, reliable, and therefore it's fair to say that the housing crisis isn't actually a crisis of housing, but rather a crisis of fiat debasement. And this is the same for Canada. We have seen housing run away on the millennials. We're looking towards their future, and they don't know where to go. They're getting priced out of where their parents live, their grandfathers. You want to stay close to these people, these members of your family that you have to take care of. Well, now you have to go and fly over to the Thunder Bay, Ontario to live in a cheap house. I love Thunder Bay, but I mean, if you live in GTA like we do, we want to stick around. And knowing that the loonie has lost 96% of its value since 1915, we got to do something about it. That the problem is in the currency, and the solution. Once again, this is a solution-based show, I think. This is solving that housing problem for so many people.
Yeah, it's an understanding that ultimately gold is still in early days of a major bull market. It's just becoming unleashed, right? It's starting to really, really move because of these external political factors, but it doesn't change anything that gold is still undervalued when we look at, Case-Shiller ratio, Dow ratio, debt ratio, all of these things. We can get a sense of if gold is cheap, if it's undervalued, fair value, or overvalued, and still it's actually very much undervalued, and silver is way undervalued. And so if you can appreciate that, you can say, okay, well, am I just going to speculate in the stock market, or maybe I can consider holding something that is undervalued, and every country, many countries, not every country, many countries around the world are using it as a way to solve problems. In the next segment, we're going to talk about how India wants to solve some problems with it. We're going to talk about how China wants to solve some problems with gold, and how the U.S. could solve some problems with gold and keep on the subject of housing. But ultimately, I love this idea, Jerry. I often think about, what a couple thousand ounces of silver could do when it goes to $200-300 an ounce. And there is a real possibility of it going there. It's just that right now, psychologically, you can't think about that. You don't see it. But right now that gold is at $3,300 an ounce, everyone's talking about $4,000. You had Goldman Sachs revising higher. We're $200, $300 away from hitting their new revision.
Time to revise.
They're going to revise again.
They're all in chalk,
and they're talking about 4,500. So there's a long way to go, and silver to play catch up is going to be extraordinary. So defend yourself against devaluing currencies. Defend yourself against these debts. Think about the solutions for the future and how gold and silver will be revalued much, much higher, and that there's no political reason to stop it at this point in time. It is a necessity. You want to ensure your wealth. People insure their car, they insure their health, they insure their family and their house. You got to insure your wealth. If you haven't done that yet, you got to consider it. Give us a call. The number 1-877-8-SILVER. The website guildhallwealth.com. Remember, if you can't hold it, you don't own it. In the last segment, we were talking about how the world is changing, globalism is breaking down, mercantilism is becoming the way, and you can see that this didn't come out of the blue. When they seized Russia's assets, when the Biden administration did that, and Janet Yellen, our favorite, I'm being sarcastic.
Thanks for clarifying.
Thank you. That kicked it off. They said, oh my gosh, you can weaponize the dollar against us. We better all start buying gold. And the BRICS nations really started to kick into high gear. We're going to all start buying gold. And as it turns out, they were right to do so, and it seems to be coalescing with the U.S. doing the same. Now, the idea of auditing Fort Knox has kind of come and gone out of the ether. It's not really making headlines anymore, but we'll see what happens. These things have a way of coming back over time. They pop up, they disappear, they pop up again, right? So we'll see how that happens. But ultimately, gold continues to be a go-to for countries as a means of solving problems. And I keep thinking about how Nixon could have done that. He could have revalued gold from $35 to $350 like that. Maybe not overnight. He could have said to Charles de Gaulle, hey, listen, I know we owe you money. I know we owe you gold. Tell you what, let's do it over a couple years. We're going to revalue this sucker, and you'll get all the gold you want. It worked out anyway. If you take the cash and bought the gold, you did wonderful. Right. And that's what countries are doing. India is considering the same. This was, again, reported by Vince Lancy this week, that there's a trade imbalance between India and the U.S., and their proposal has been, okay, that's fine. Settle up with some gold. Settle up with some silver. You know we love it, so if you don't want to fix the balance, just send us some of the product. That is mercantilism that we're talking about at its core. Settle up trade with the gold. That's what the BRICS were doing. Right. We are going to create a currency, trade deals, and ultimately the BRIC currency, it's going to have a gold portion in it, and we're going to be able to settle up trade if we need with gold to balance.
Exactly. And Vince Lancy did comment on that. He said the Ukraine sanctions, it didn't create a flight to gold. It just created a flight into gold by institutions that now fear the dollar itself and its SWIFT system plumbing it may need to be selectively inaccessible. And this really just highlights that gold is unencumbered by jurisdiction. That's what makes it so special. Wealth insurance, geopolitically. Again, the question is it's what's on your balance sheet here. What are you going to settle with? It's beyond jurisdiction, beyond religion, language, creed, border, and it's unencumbered by intermediary risk either. It becomes once again the default reserve diversification asset is what he's mentioned, and that is very clear. That's what the solution is, and this must be the solution for us because we saw the same game plan in a smaller scale here in Canada, where Chrystia Freeland decided to freeze bank accounts. We were sanctioned as well for not being quote unquote a good citizen. Who's a good citizen in their eyes? In the eyes of a tyrannical government, you could be the enemy number one tomorrow, and your bank account could be frozen. Well, this is the one way of securing your wealth in the event of what he said, swift system plumbing. Yeah, your money could potentially become inaccessible.
Wow. The number 18778 silver, the website guildhallwealth.com. So holding some physical gold and silver. Personally, I know that during COVID, by the way, we were able to deliver physical gold. Some people wanted to take delivery from their registered accounts. Some people took delivery from their depository. If you had a safety deposit box, remember, banks shut. They closed down. You couldn't get in. If you had a safety deposit box, sorry, no can do. But we were able to deliver because vaults kept working.
Yeah.
Right? Now, you couldn't show up. We had to ship it to you, but nonetheless, you could get it in your hand, right? If you wanted to take delivery.
That's the key.
So the key is that the physical was there. There is the bail-in clauses, and you know what? I don't even care about the bail-in clause. They're stealing it through inflation. Forget that.
Yeah.
I love that people always worry about, well, gold's really expensive and it's going to be on, if I'm holding it, it could be stolen, da-da-da. And you just say, are you worried about the government really taking something from you? They're taking 70% of your income.
Mm-hmm. Covertly. Well, not even covertly anymore.
Covertly. Income tax, right? Business taxes, HST, GST.
I had a great meeting yesterday.
Carbon taxes.
With a group. I mean, she inherited from the UK a $1 million inheritance, £1 million. After death tax, that was $400,000 in death tax. That equates in Canadian dollars at a rate of what, 1.8 FX. That's about 750,000 Canadian dollars from her mother's hard-earned work.
Yeah.
Right? Out the door. You paid taxes all your life. Oh, you're dead now? I'll take that. Thank you very much. Almost 50%. It's gross.
That is gross. So I want to just quickly get back to how it's solving problems. In the last segment, we talked about it's solving problems of a housing crisis because basically part of the housing crisis is unaffordability. And we know that gold continues to grow its purchasing power against property over the last decade. But now I don't want to steal a phrase from Rafi Farber, but it's almost endgame-ish, right? Or the beginning of this real globalism breakdown. And when that happens, you're going to see what we're seeing now, which is gold starting to move quite quickly. And nothing's going to go up in a straight line. Hey, if you can have a $100 up day, you can have a $100 down day. But the support is there. The difference is we're on the other side of the cup, right? When we think about cup and handle, we're on the other side of it. We're at a place where we've built support for years in this market. And now we're looking at the next major leg up. So the purchasing power of gold is going to grow, and the purchasing power of silver is going to be even more dynamic when it becomes unleashed. So housing would be solved by, again, a growth on the asset side of the balance sheet, just like if they revalued the gold at Fort Knox, which it's currently valued at $45 an ounce or something like that. They're going to gain, $800 billion, give or take, at this point. Well, I mean, if gold keeps going, they're going to gain a couple trillion if they keep going in this direction. So that builds on the balance sheet side. What about pensions? Because I know in China, Jerry, they've added gold to pensions or to insurance, and I think they're doing it to pensions now. But talk to us about how gold can solve the pension problems. And the pension problems being they've had a low interest rate for years, and there's less money coming in than needs to go out. We're talking unfunded liabilities.
Mm-hmm. Yeah, this is huge. So the research department of CITIC Securities, which is one of China's largest securities investment institutions, disclosed that insurance funds will purchase gold at a massive scale in 4 steps. They're going to be acquiring to support up to, from where it is right now, 1%. They want to go up to 5% of total pension, property, and insurance assets. That equates to 35.91 trillion renminbi, or 2,432 tons of gold that they need. And to put that into perspective, that equivalency equates to 6.4 times China's annual gold output, and it exceeds 12 years of U.S. production at 2024 rates. So they need a lot of gold. But what was highlighted in the 4th tier of this strategy, that 109 million ounces of gold by phase 4, meanwhile, they were projecting to revalue the gold price to $5,390 per ounce. So this is showing us the very thing that we've been talking about, the reality of revaluation. Not just the reality, but what it solves. Because what you have done, you have just boosted that side of your balance sheet, the most important side of the balance sheet. What are your assets? You want to go and buy a house? Well, what's your down payment, sir? 2%? Sorry, hit the road, Jack, unless you're in, subprime mortgage. You want that type of environment once again. But no, you want to maybe get up to 20% down payment. That's what we're talking about here. And right now, we look at the unfunded liabilities of the United States. That's a big one. Countries have lost trust in the U.S. dollar because of their debts, $36.7 trillion in debt, plus over $100 trillion in these things, unfunded liabilities, Social Security, pensions. They're unfunded. There's not enough. And when you look back to pre-World War II, the U.S. had debt, and then a portion, 40% of that debt had to be gold. That ratio is no longer 40%. Now we have over $100 trillion in unfunded liabilities plus debt. The gold that they have in the U.S. represents 2% of all of those liabilities. So we see the solution what China is doing. Let's boost this side of the asset balance sheet, and it will force and reveal that this will be the strategy for the United States of America to do the exact same thing. This is what we've seen with the BRICS. Oh, the BRICS did it first over there and backed up their currency with gold. Oh, we'll do the same thing over here. It's a nice game of wrestling. It's a nice show of wrestling. It's WWF all over again.
The number 18778 silver and the website guildhallwealth.com to hold physical gold and silver in your portfolio and enjoy the revaluation. Josh Philip Fair of Scottsdale Mint, he posted on X. We re-X'd it. I guess that's how you say it. She's not an X. She's a re-X. This rally in gold is not a hedge. It's a revaluation. And to your point, Jerry, about this revaluation, Luke Roman posted this. He said China ran a record trade surplus of $992 billion in 2024. Within this, China imported 1,384 tons of gold in 2024. This means China's trade balances at $22,000 an ounce of gold.
Yeah.
That's the type of thing we're talking about in rebalancing. And then, you just say, okay, we know that it needs to revalue higher. And when we add where it can be revalued to with all of these other ratios that we've been demonstrating and pointing out today, as well as on every other show, we're pointing these things out, you can start to get a feel for where the price action could end up. But with that said, I think we should look at, there was a post here put out by Egon von Greyerz, and it was about when do you know when you should be selling your gold? And the quote is, you should only sell gold when governments start running surpluses, stop printing money, and reduce debt, all of which is highly unlikely.
Yeah.
But that is an indicator.
It is. Absolutely.
If you want to hold some physical gold in your portfolio or take delivery of it for the first time, get some skin in the game, see what it's all about, understand the pricing, and start to follow this market with having some physical product in your hand, you can give us a call at 1-877-8-SILVER and the website guildhallwealth.com. You can also store it. We offer physical storage at BRICS, fully allocated, fully segregated. It's a great way to ensure that your product is secure, that it's safe, that it's fully insured, protected, and liquid. Easy to buy and sell on a phone call. You're on vacation, you're with the kids, you're enjoying the family, something's happening in the market, or maybe you've done so well in your gold that you want to now sell some gold to help your kids with the down payment.
Beautiful.
You can give us a call. We'll help you do that. It's a very liquid market. And of course, you can also hold physical gold and silver in a registered account. This has been one of the most popular ways to get involved in the physical gold and silver market. And it's just still so exciting and unique for us. And we're still very excited about it, to have the opportunity to help people own physical in their registered accounts. The number 1-877-8-SILVER. The website, guildhallwealth.com. Let's talk about the death of luxury in the next segment and what that means and how gold and natural fancy colored diamonds play a part. The number 1-877-8-SILVER. The website, guildhallwealth.com. We're talking about physical gold and physical silver and the revaluation of these metals much, much higher, and how they're going to solve a lot of problems in this new multipolar world. One of the things that this tariff issues have caused, Jerry, is China's trying to get on the offense. And one of the things that popped up in the last week or two is on TikTok, you've had all of these manufacturers of, and I put in air quotes, luxury goods, showing the world that, hey, those Louis Vuitton sneakers that you're buying, they don't cost that much. Now, I think the question is, so it's been a revelation to many, many people, because they're realizing, wait a minute, are the companies that I'm buying luxury items from, are they ripping me off? Are they cheapening the quality of the products? Are these products not that expensive? Are they very easy to create, et cetera, et cetera? The problem with, I have to say, from a critical eye standpoint, the problem with these TikTok videos, and I have no doubt that they're very skilled and that a lot of the materials are very, very good. But I don't know if they're just showing you knockoffs and that their knockoffs are very, very good. It doesn't say whether or not these main brands are actually using these factories. What I am saying is that it's very clear they have the capability to do it. Mm-hmm. But what they've done is they've sowed a seed of doubt in these luxury brands. And I think that is telling for everything we've been talking about, which is it's not about believing in the BS of it all. We've always talked about value. It's why we like gold. It's why we're talking about how do you know if gold is undervalued, fair valued, overvalued. People have no idea what the value of anything is anymore. True. You ask them what's the value of the dollar. They go, I don't know, 1.4 against the US. Well, what's the value of that? Can't tell you. I don't know. Is it backed by gold? Right? No, it's not. Not yet. So it's just kind of really interesting to me. And I also think about, and I mentioned this last week as well, the idea that the lab-grown diamonds, which are it's factories, guys. It's like massive metal machines. It's not guys in lab coats, okay? What it's done to the market. Would you imagine going to a Rolex store and they show you the knockoff reverse engineered version and they say, hey, you can buy the real thing for $20,000 or you can buy this version for $4,000. Which one would you like to buy, right? And that's what's been happening. We noticed that in the diamond market, and you can see that sort of in the luxury market. You don't know how much of these parts are made in China and then put into these items 40% of it, et cetera. You don't know.
Right.
So people are kind of getting sick of the BS, and they're realizing, you know what? I don't want brands that lie to me.
Mm-hmm.
I want to know that what I've purchased, I feel good about. Now, it doesn't necessarily mean you have to go back to 100% handcrafted whatever. But I think what our takeaway is that when it comes to the world of natural fancy colored diamonds, there's been no lies. They are extremely rare. You can't fake them. They are a premium luxury product, but luxury in the true sense, rare.
Mm-hmm.
They are rare. And as a result, the value has always maintained itself because you're talking 1 in every 10,000 diamonds being a colored diamond, but 1 in a million will be an investment grade. That is a finite amount of diamonds out there. And some of the diamonds that we've offered over the years, some, not all, but some don't come to market for several years. You see one every several years. Some you see a couple a year. Some maybe 5 a year.
Mm-hmm.
Our typical, let's say, 1 carat vivid yellow, there's 50 a year. With 50.
Yeah.
That's not saying that it's a good quality. It's not saying that it's a perfect square, well-proportioned diamond. It just says, hey, it's internally flawless vivid yellow.
Right.
Right? So what are your thoughts on luxury, the death of luxury, new brands? What's going on in the diamond market, colored diamond?
Yeah, this is a huge revelation. It's now trickling into the entire, the retail space, luxury space from, you look at the Louis Vuitton, so luxury retail. Then you even look at things that have been ripped off, looking at even colognes and perfumes. Would you go with that route? Would you go with a fake perfume? What would that do to your skin, right? What about fake food? We're seeing the advent of that and people realizing, wait, I need to look into the labels. Look at those labels. Where is my authenticity?
It's also a reflection that it's gotten too expensive, that the average person can't afford basic luxury.
Mm-hmm. That's true. And it's also a call for for the way I see things. For far too long, the monopoly has been achieved through the cheap labor. We know what's happening in these places, the camps, the unjust nature. Are they getting paid? Are they getting freed? This is the way that they've been doing it. And I think what we're seeing is, let's bring these things home. We're noticing Honda doing that, bringing it home. If you don't want to do it over there, if you want to avoid the added tariffs, bring it home, bring it into the U.S. That renders this monopoly, this jurisdiction for monopoly, eventually null and void, because you now move away from that cheap market. But back to diamonds. We've seen the implosion of fake goods flood the market, and the diamond, the natural fancy investment grade Guildhall diamond, has come out unscathed and on fire. I don't even know if that's the last time I saw a blue diamond. And now this blue diamond is now on the market. It's now coming back to Christie's, and this is the $50 million price tag on the world famous, the legacy Golconda blue. Christie's will spotlight this 23.24 blue diamond with royal Indian provenance at its upcoming Geneva auction, where it is set to fetch up to $50 million. This is the largest fancy vivid blue diamond ever offered at auction, and the legacy of it all. Beautiful story. Yashwant Rao Holkar, the Maharaja of Indore, and a member of the Holkar dynasty, along with Maharani. Lifestyle, luxury lifestyle of these, the wealthy, the uber wealthy. And what was it about them? I looked into their lifestyle, the legacy of it was acquiring land, military might, assets. And as we talk about real money's 5 characteristics, you want something on your asset balance sheet that bears these characteristics: divisibility, portability, durability, recognizability. Look at the legacy of this stone. And number one thing, scarce. If your money is not scarce, it's not money. It's not a store value. It's a piece of paper that gets fried, like the synthetic stones, like this luxury market that's up in fire. There's a race for real, and in this race, don't get left behind. You want to stay ahead with real assets with Guildhall Wealth.
The number 18778 silver, the website guildhallwealth.com. If you want to own physical gold and silver, give us a call. We'll show you how to get involved in the market, get you with your first purchase, and also help you how to evolve your acquisitions and your stack. Maybe you're looking for depository storage. Maybe you're looking to improve your retirement fund and have some physical gold in your RSP. Or maybe you have extra cash that you're sitting there in the bank saying, what am I doing? It's making no interest. It's not getting anything. I see gold and silver rising. Maybe I should put that into my TFSA and put it to work and make sure that I'm not losing against this devaluing currency and currencies around the world. Jerry, last few minutes here, how's it been watching this market the last couple months, last few weeks? What's your vibe? What are you feeling about your clients? What are you seeing in the market? How are you feeling?
Quite positive. I've just been looking at my charts. I'm a chartist. I like to create my charts, and I've been constantly, just like these banks, constantly revising. Your revisions, your targets are in chalk, because you just got to wipe that away and write a new one. I've been doing my Fibonacci's, and there's no ceiling. And we talked about this escape velocity in one of the previous shows, where once you break through resistance, it becomes easy. It's like a hot knife through butter, and that's what we're seeing. And the volume of people interested, questioning, are we at the peak? Answering that question. That's been a huge question. I'm not sure if you're experiencing the same type of question.
Definitely.
Are we at the top? And how do we know that we're not at the top?
I actually had a conversation with someone yesterday, and he just said, I'm gonna hold off until there's like calmer waters.
What does that mean?
I don't know. I guess I said I'm not sure what you mean. You either own.
Are we fishing?
You either own. Your house is becoming on fire. Do you buy insurance now or do you wait?
Let's wait for it.
but hey, listen, it's true. It's not for everybody. It really isn't for everybody. But I had a client call me. I know Andy Scheckman mentioned this. He runs Miles Franklin in the States, and he said he was working out at a gym and he was watching, I guess, CNBC, and gold never came up. He had to watch the rotating numbers like 40 times before it came up. And I had a client say, "Yeah, did you notice that National Post doesn't post gold? It used to be on the cover of the financial portion." And he said, even on this station, 640, they talk about Bitcoin over gold a lot of the time. I don't even know if they're mentioning gold. I think it's very interesting that this is all happening at a time. You're seeing all this institutional and central bank, but a lot of the mainstream is still missing it. Mm-hmm. What do you think turns for them?
It's just a matter of time where you can't acquire the metal. When the metal gets totally drained from vaults, China's relentless purchasing of metal, it's going to lead to the COMEX being totally exposed. They have been reduced. The vaults in the West here, registered inventories are down over 80% since 2022. Just a 3.5% spike in demand in gold. You can see triggering a default. So, and when you have that default situation, you have a new price discovery. You lose that privilege of giving us the spot price from New York. We'll have to get the price from somewhere else. So we're seeing, the Oriental Ghost by Zhou Jun. He posted this week. A senior bank exec said that to open the silver accumulation, banks must reserve physical silver in proportion to their other assets or liabilities. The market's not even looking at silver. I know gold has retained the headline and the crown of this rally, but the rally really begins when the silver to gold ratio drops from 102 where we are today. It's telling us it's a screaming buy for silver, but we haven't broken out. We haven't seen the hockey stick move up in silver and gold. Only until we go down below 70 to 1. That's when you get the popcorn. That's when you start seeing the fireworks.
I think even as you move back to 80 to 1, I think that you're coming up on the fireworks. So is one of the concerns, we got about 30 seconds, is one of the concerns that there won't be product or there won't be a way to price it, or there's, people won't be able to get into the market at some point?
Yeah. It seems that way. Like we're seeing some of our wholesalers not understanding that gold and silver should not be tariffed, but they're holding out. So why not add that tariff like a premium? I remember when, the prices shot down, during COVID, when it went down, the spot price would hit like $14 and we were trying to acquire it, but the premium was like $6 over spot. That's huge. We were willing to pay. So tariff it, we'll be willing to pay, deliver it. Or you don't want to deliver it to us because a bigger buyer needs the product, maybe the U.S. Treasury.
We will follow the story. If you're looking to acquire physical gold and physical silver, we've been in business since 2002. We're a registered dealer with the Royal Canadian Mint, and we also work with Questrade to acquire physical gold and silver in your registered account. And we're very service oriented, so we'll walk you through the whole process, and we'll be with you every step of the way, walking you through. The number 18778-SILVER, the website guildhallwealth.com. Remember, we also offer physical gold storage and silver storage if you're looking for a way to secure, insure, and increase your liquidity of that market. If you've missed a show, catch us on YouTube, catch us on Rumble, catch us on Spotify, and of course on the Global News website. You can catch our shows and follow us on X. The number 18778-SILVER, the website guildhallwealth.com. Jerry, thank you so much. And thank you so much to all our listeners for joining us this week here on The Real Money Show on AM 770 Calgary and AM 640 Toronto.